Morning everyone, and welcome to today's webinar, Build a Better Trades Business in 10 Steps. So just a little bit of housekeeping before we get started, although I'm sure most of you know already how Zoom works because you probably attended a lot of Zoom meetings or webinars. You can click audio settings here to select and test your speakers. You can submit any questions you have throughout the webinar using the Q&A button, and we'll answer as many questions as we can at the end of the webinar. If you do need to leave the webinar anytime, just click the leave meeting button and just use the same link or ID and passcode you used to get here to rejoin. Once the webinar is finished, there will be a short questionnaire that will pop up on your screen. If you could just spend a couple of minutes filling that in for us. We read every piece of feedback that we get and we take it on board to improve our webinars going forward. So first of all, I just want to explain a little bit about Roslyn Associates. Our purpose is to help our clients build a better business and help them make more money, save time and live a better life. And we do this through our business development and coaching services alongside being accountants and chartered tax advisors. So who are we talking to you today? My name is Ikra Aslam and I am one of the client managers here at Roslyn Associates. And joining me is Ian. For those of you who don't know him, he is one of the directors at Roslyn Associates. So every time we do a webinar or one of our business development services, we like to start with a thought for the session. So we've got here a quote from Mahatma Gandhi, and that's live as if you were to die tomorrow, learn as if you were to live forever. So to me, this means live in the moment and don't spend time worrying about what's going to happen or what is even not going to happen in the future. The second sentence says to me that to continue to grow as a person, you need to keep learning. I don't think it's even possible for anyone to get to a point in their life to say, okay, I think I've learned enough. We are really passionate about small business owners getting more from their business, and we're also really passionate about personal learning and development. And it's why one of the reasons we have a core value at Roslyn Associates of continuous learning. Every team member at Roslyn Associates is constantly learning something, whether that's doing accountancy exams, tax exams. We do NLP training, we have NLP qualifications, counselling and coaching training as well. So someone is constantly doing something. In my experience of working with owners of small businesses, growing a better business involves personal growth too. And we believe that to own and run a successful business without a doubt involves personal development too. We've had the experience of dealing with business owners who understand and believe this too. And this type of business owner are the ones that are growing their business successfully. We've also had the experience of dealing with business owners who don't have that same mindset and have struggled to grow their business and grow themselves personally. And this is why it's so important not only to have a business growth mindset, but to also have a personal growth mindset as well. So today we are going to share some practical things you can do to improve your business and hopefully your life. But that's no substitute for ongoing work, and that's working on your business and not just in it. Before we begin, I'd like you to just spend a few moments to consider what a better business would actually mean to you. Would it mean more profit or more cash? Or is it more than that? What do you really want? And how will you balance work and the rest of your life? What does your business need to deliver to you? Perhaps you're looking for a less stressful environment. Or what about actually enjoying going to work? Do you still enjoy going to work? A better business is one that delivers on 3 freedoms. And you've probably heard us talk about these three freedoms before. We talk about it on our website and we talk about it on our social media as well. So those 3 freedoms are time freedom, mind freedom and financial freedom. And today we're going to take you through 10 steps that you can take to start achieving and working towards those 3 freedoms. We see far too many clients not achieving these and working crazy hours and not spending as much time as they'd like with their kids and just getting burnt out. So that's why we're running this webinar today. Just have a think about your business. Who teaches you how to run a better business? Your solicitor? Your bank manager? Did you learn it at school? Because I certainly was not taught at school how to learn a business, how to run a business. Who do you think is the best person to teach you how to run a better business? It could be your accountant if you've got the right one. But how often do you set time aside with your accountant to discuss forward-facing issues and learn how to run a better business, rather than just looking at previous figures or just looking at accounts that was for, you know, a year ago? Everyone in business needs independent support. And I'm sure you're all absolute experts in the technical aspects of your business. But today is in part about reflecting on what you're not so good at. Perhaps that's understanding the numbers in your business, or it could be creating and implementing a simple business plan. Perhaps you need to lead the business and team a bit better. These are all things that we can help you with and things that you can improve on. We want your business to serve you, not for you to be serving your business. So this is what we're going to cover today. The 10 steps, the what and the why in relation to the 10 steps, implementation best practice, next steps and options for support. And then it's accountability time. Time for you to decide what you're going to do as a result of coming along to this session today. And I want you to go away from this webinar with at least 3 things that you can apply straight away to your business. So it's really important that you write ideas down as we go along through this webinar today, because if you don't write them down, you're not going to remember them, and then it's not going to happen. And then, of course, we'll be answering any questions that you guys have got at the end of the webinar. So just remember to put them in the Q&A box and we'll get to them at the end. I'm now going to pass over to Ian, who's going to go through the first step.
All right, get this working. Right, thanks, Ikra. So step 1 is really about setting a clear goal for your business. So as somebody once said, if you don't set a goal and you don't know where you're going, you'll never know if you've got there. So I want to very briefly, because we've got an awful lot to pack into this session today, I really want to really briefly cover an in-depth method of setting goals, which makes it much more likely that you'll reach them. We're talking mainly about business here, but the same method applies for all areas of your life. And it's a 6-step process, and we've used it with clients to really compelling and motivating goals. So the first step is that the goals must be stated positively. And what means is your brain can't process negatives. So if you're not sure if this is true, think about or don't think about a purple elephant. Right, so you're now thinking about a purple elephant. It's just not possible. And as well as that, the unconscious mind works to help you think about. So if you express your goal as, I want not to be stressed, your unconscious mind just hears the stressed and looks for ways for you to be stressed. Or if you describe your goal as, I want to be more relaxed and at ease in the world, your unconscious mind will help you find ways to be more relaxed and at ease in the world. So the first point is to express your goal as a positive thing. And if you find this difficult, ask what you want instead of the negative thing that you think you want. The second step is to work out what resources you'll need to achieve your goal. And this could be a whole range of things. It could be finance, people, new skills to be learned, new beliefs or attitudes. And we'll come back to this later. The third step is that make sure the goal can be started and maintained by you. So a goal to be, for instance, the best electrical firm in the country isn't quite fully under your control, because you don't know what other people can do and you certainly can't control them. But if you have a goal to be the best you can be, then you can definitely control that. And if you fail to take this into account, what happens is you start making excuses. Well, I thought I was going to be the best in the country, but they did something I couldn't control, therefore it's not my fault. So that makes the goal basically ineffective. So the fourth step is to be clear on what evidence will tell you that you've achieved your goal. So you might say, I want to have more money, but that won't really work. But if you say, I want to see £100,000 in my bank account, then you can tell definitely yes or no, have you achieved that goal? And there could be all sorts of evidence that could tell you if you have achieved your goal. If you can't think what evidence it would be for your goal, it's probably a bit too vague. You need to make it a bit more specific. The fifth step is to consider the knock-on effects of achieving your goal. So for instance, if your plan to get your goal involves long hours of work, it might mean seeing less of your family, for instance. And by considering these unintended effects, you can test if your goal is worth actually enduring these effects in order to achieve it. Or it might lead to changes in your goal to avoid these effects. Or another way to do it, of course. The sixth and final step is to put a time frame on reaching your goal. At this stage, an idea to reach 3, 5, 10 years ahead with a really big business goal. Then break it down into shorter periods. Again, we'll talk about this a bit later. It's a very short introduction to part of the process we use to help our clients set motivating and compelling goals. We often work together for a couple of hours with clients to help them get real clarity on the goals they want to achieve. Right, so that's the first step. Have a really clear goal, know what you want to achieve. The second step is to be open to change and new learning, because what you're doing now isn't working. It's not getting you what you want. So you have to do something differently. And you might have to be different. So essentially, overall, you'll need to start working on the business rather than working in the business. But doing this and making these changes can be difficult. We all have habits that we've developed over time and beliefs that we've difficult to change. And that's why we need a compelling, motivated goal at the beginning to get us motivated to make the changes. So thinking about changes, what do we need to make specifically? And again, this is a method we use with clients. We're looking at what changes need to be made in order to achieve the goals that we've set. The first is your environment. In other words, everything that's around you, and this is the external world you live in. What changes do you need to make? It could be your office, your warehouse, your home, maybe your tools, your vehicles, your equipment. And a common change is to find something somewhere to work for the business. It could be getting a home office or renting an office somewhere else. You might need a computer or a printer. So this is kind of the very basic level of what needs to happen. The next level of change is behavior. What will you need to do differently? Maybe stop working on the tool so much. Set aside some time for working on your business. Maybe other behavior changes you need to make. The third is your knowledge and skills. Whilst the skills and the knowledge you've got are essential for delivering the product or the service your business does, whether you're an electrician, a craftsman, a joiner, a carpenter, whatever, but these skills might not be enough to actually run your business. You might need to learn about leadership, management, if you take on people to work with you, how to motivate your team, and just how business works generally. Nobody tells anybody how to do that. You have to learn it on the job, really. And one area where all successful business owners learn is their business's numbers. If you can't understand your profit and loss account, your cash flow, and your balance sheet, you won't know what the numbers are actually telling you. So you won't be able to make really good decisions based on good numbers. Now, you don't need to be an accountant. That's what we are, that's our job. But you do need to learn enough to understand the numbers. A useful resource could be the recording of our webinar, Know Your Numbers, which we ran a few months ago. And you can actually find it on our website or our YouTube channel. Fourth level of change is attitude. I won't say too much about this here, as the changes you need to make will depend on where you are right now. Overall, attitudes such as taking responsibility, being flexible, teamwork, positivity are all helpful towards being a successful business owner. And finally, beliefs, the sixth level. This is a really difficult area to work on by yourself. A help of a coach might help you uncover some of the beliefs which might be holding you back. the most common limiting beliefs I come across are a belief that the goal, it just isn't possible, nobody could do it, so I might as well not bother. The second one is, even if I believe that it's possible, I can't do it. And then, so you believe that you don't have what it takes to achieve that goal. And the third one is, even if it is possible and I could achieve it, at some level I don't really believe I deserve it. And this can sometimes take the form of, I'm not the sort of person who can do that. Whatever the level you're looking at, it's important to identify the changes you need to make to move to being the owner of a better business. So that was the first two. Get a goal, a really compelling, specific goal. Get it defined. Next one, be open to change. You have to change. You're not going to get what you want by just being exactly how you are now. So step 3 is about defining where you are now. And it says warts and all, and that's about being honest. And often this step is overlooked. If you're using an EPS system or some kind of an app in order to get somewhere, it needs to know where you are. If you haven't turned on location services, it doesn't know where you are, so it can't tell you how to get to where you want to go. So in order to get where you want to go, to achieve the goal in step 1, you need to know how far away you are and whereabout you are in all different areas in terms of your current existence as a business. So some of the things that you need to look at are, if you've got more than one business owner, how aligned are they? If I was to ask them independently, where do you think the business is now and where it's going, and where do you think? In our experience, we often find that they're completely separate. One says, I want to get to 100,000, another says I want to get 10 million. There's obviously something they need to talk about in order to get that on both on the same page on this area. The second is what you're doing now, the level of activity, whether it's not just sales numbers, it's like how many leads are you getting, how many proposals have been written and accepted, what's your average sales value, what's your gross profit percentage, often is a very important one. Possibly how many networking events are you attending or running per month. You need to know this in order to know how you're improving and be able to measure that improvement. The third one is the extent to which your team has bought into your plan. Now, if you're just a sole trader and with nobody else, you might have subcontractors, you might be thinking of taking on people. At some point, if you're going to grow your business, you're going to have to deal with people. If you haven't got your team on board, you're not going to achieve what you want to achieve. There have been studies, and a recent one said that employee engagement is only about 30% of employees in companies, and then 52% were disengaged and 18% were actively disengaged. So also, studies also show that businesses with engaged team members significantly outperform those without. The fourth one to look at, and under the where you are now, is, are you measuring the right things? It's all very well to set targets, but if you can't measure them, you'll be flying blind. You won't know where you're going. And the fifth one, what are your 5 biggest vulnerabilities right now? Sorry, I should have been clear as we go. What are your 5 biggest vulnerabilities right now? For example, poor systematization, high team member turnover, cash flow strains, or a weak balance sheet. So just as, say, Google Maps asks you for your starting point before you make a plan to head somewhere new, you really got to understand where you are right now. If you don't do that, you're really heading for problems. So step 3, or 3A, it says there. This is a tool we use with clients to help them get clarity on where to concentrate first. So we ask them to consider each of the 10 sections you can see there and say what mark out of 10 they would as to their personal satisfaction with that element at the moment. So it's not an objective measure, it's just how happy they are with it. Someone with £1 million in the bank could still be only a 3 or a 4 in terms of cash if they have, in the context of wanting to have 25 million in the bank, whereas somebody with an overdraft might think having £10 in the bank would be a 9, that sort of thing. So it's really a subjective thing. And what we do is we look at the bits with the lowest numbers, and try to get some quick wins in that and see where we can actually help to improve, try and get, we may never get everything up to 10, but we certainly can get it much higher than where they start in many. So now I'm going to hand back to Ikra, who will step out step 4.
Yep. So just to recap what Ian went through in the first 3 steps. So step 1 is getting clear on exactly what you want. Step 2 is about getting open to change. And step 3 is knowing where you are right now. So you're ready for step 4, which is making a clear plan. Now, remember that the business is there to serve you, not the other way around. You shouldn't be a slave to your business. So referring back to step 1, where you perhaps were thinking about who you want to be, what is it that you want personally, what is it that you want, where do you want your business to be, how you want to work, what hours are you prepared to put into it, all of those sort of things. So it's about putting step 1 into a plan in terms of what you want for your business and what you want personally. And make sure that your plan is linked directly to how your business will deliver on your personal goals. So we do business plans with clients, and we have some rules that we follow when we create business plans with clients, and I'm going to share a few of these rules with you just now. So the first rule is keep it on 1 page. You often hear when someone talks about creating a business plan, you might think of some sort of 50-page document that's got lots of words and numbers and stuff in it, and you probably make it once, put it in the drawer, and you never open it again. Keeping it on 1 page just keeps it simple, and it's there for you to refer back to, and it's something that you will probably look at more often than if it was a 50-page document. So the business plans that we create with our clients are on 1 page, usually 2-sided. Identify no more than 4 goals for the year on your business plan. If you've got too many goals, you'll struggle to achieve them effectively. So it's really important that you just stick to about 4 main goals. Cascade your annual goals into 90-day goals and identify the actions that you need to complete in order to achieve those goals. So you could have a goal that is for 1 year's time that you want to achieve. And it could be a really big goal and you have no idea how you're going to achieve it. But breaking it down into a 90-day goals and then breaking that down into actions that you need to do to achieve those goals makes it simpler and gives you step-by-step guide on achieving the 1 year goal. Next is identify no more than 5 key performance indicators to measure. Any more than that and you'll lose focus. Next is share the plan with your team. Their personal career goals should be linked with your plan. Help them identify their own actions and key performance indicators. Next, keep the plan highly visible to your team and to yourself as well. Track your progress against your plan and celebrate success along the way. And lastly, review your plan at least quarterly. Like I said with the first rule, if you had a 50-page business plan, it's probably likely that you'll do it once and stick it in the drawer and not look at it again, where by following these rules and keeping it to a 1-page plan, it's easier to go back to it and review it. And what we like to do with our business clients is to say that the business plan is a live document. It's not something that it can't be changed. It's something that we review with them regularly, update it if it needs updating. So your business plan should be a live document as well. And have someone that holds you to account in terms of the actions and the goals that you put into the business plan. Your business plan is basically your how-to guide to achieve what you want in your life and what you want to achieve in your business. It's probably one of the most fundamental documents in your entire business. And you've probably heard this quote on social media or something like that, but it's a dream written down becomes a goal broken down into steps becomes a plan, and a plan backed by actions makes it a reality. So along with the business plan, you should also have a business budget, and that should definitely be part of your business plan. And we use a method called bottom-up budgeting with our clients. So I've simplified this a little bit just to get the point across. So let's say if, as a business owner, you need £100,000 a year to cover your living costs. So we start at the bottom. So that's net profit after tax of £100,000. This obviously doesn't take into account if you have any loans to repay or have any vans on hire purchase, etc. This is just really simplified to help understand what it is that we sort of do with clients and sort of guide you, and perhaps you can use this for your business plan if you're going to create one. So we've got £100,000 before after tax. We then add on the tax, which gives you the 125,000 profit before tax. And let's say you know your overheads for the year are 200,000. So if we add the profit before tax and your overheads, that gives you your gross profit of 325,000. Now let's say that you know that your current gross profit margin is 50%. Then your annual sales need to be 650,000. So let's say you work an average of 46 weeks in the year. That's £14,130 in sales per week. If you were to just improve your margins by 2%, and this gross profit percentage changes from 50% to 52%, then to be able to get the same net profit after tax of 100,000, you would only need to make 13,586 in sales per week, compared to having to make 14,130 per week. So from explaining this, hopefully you can see and understand why it's really important to understand what your current situation is now. And if you were to improve small numbers and percentages here and there, what difference that can make. So moving on to step 5, that is all about getting your organizational structure right. And it might not seem to apply to very small businesses, but if you are really serious and want to grow your business, it's essential that you start thinking in terms of your organizational structure from day one. So the organizational structure shows the departments in your business and who is responsible for what, whether that's if you've got team members internally on payroll, or if you've got external subcontractors, you might have an external accountant, etc. It shows you who is in the organizational structure and how the hierarchy works. And we like to call this the 10 hats organizational structure. So the 10 hats are, we have the shareholders and directors above the line, which are all strategic. So the shareholders are the ones that own the shares of the business, and directors are those that set the direction of the business. And of course, in small businesses, the shareholders and directors are usually the same person. Then below the line, you have everyone who is operational. So you have the leadership box there, which could be the CEO, and they're the ones that make it happen. So whatever the direction the director set, the leadership box are the ones that make it happen. And then just to explain the other boxes at the bottom in terms of what they are, you've got the product, service, development box there, and that's about coming up with perhaps new services that you could offer your customers. For example, let's say it's an electrician business, and you know that electric cars are becoming popular, so you want to start offering a service of EV charging points for homes. That's something that perhaps the product, services and development department would come up with. You then have your operations and delivery department, which is obviously those that are working on the tools and getting the job done. You then have your sales department and your marketing department. A lot of people put these sort of in the same box, but in simple terms, the marketing department is sort of, dealing with the website, your social media, getting the leads in. And then the sales department then takes over from the point the prospects or potential clients get in touch. So they sort of, talk and go out to see the job, perhaps talk to the customer and then send out a proposal and job spec. And then you've got the finance department. So that could be involving your accountant. It could be if you've got a bookkeeper, in-house bookkeeper, external bookkeeper, someone who runs payroll, etc. Looking at cash flow. You've then got admin/IT. So that could be, if you've got an external IT support perhaps, or if you have someone who works in an admin role within the business, someone who, you know, takes phone calls, deals with emails, etc. And then you have the human resources department, HR, which is all about dealing with the team, dealing with any issues in relation to the team, and obviously hiring and firing. So the whole reason why we would say it's important to have this organizational structure from day one is that as a business owner, if you're wanting to grow the business, you're probably at the moment, if you're a really small business, in every single one of these boxes. You are the one who is the shareholder, director, you're in the leadership box, and you're probably in every single one of these boxes as well. You're doing everything. The point is, as you're growing the business, you want to be able to come out of the boxes and the roles one at a time. So let's say you're an electrician business, and at the moment you are doing everything in all of these boxes. The first thing that you do could be that you employ an admin person to take on dealing with phone calls and dealing with emails. And then the next thing could be that you start taking on and employing apprentices and electricians. So slowly you come off the tools, so you don't need to be on the tools as much, but you're still doing all these other things. But hopefully, as you grow the business, you would want to get to a point where you perhaps just stick to either these three boxes up at the top, or even just shareholder director. You are the one that owns the business and the one that sets the direction of the business, and you have the team around you to be able to do everything else that you were doing when you first started the business. So there are some important rules to follow if you are going to create your organizational structure. So the first rule to remember is that there should only be one leader. So one person is in charge of making things happen. That doesn't mean to say there can't be two directors. Of course, there can be two shareholders directors who help set the direction of the business, but it's important to have one person who's in charge of making things happen. And that's the same in each of these boxes at the bottom, making sure that one person is in charge of each of those boxes as well. So only one person responsible for each department, because if you were to have more than one person responsible, it could cause issues. So for example, if there were two people who were in charge of the sales department, you know, you might have one person who says, oh, I thought you were going to deal with that prospect, and then the other person goes, oh no, I thought you said you were going to deal with it. So just because the person is responsible for each of these departments doesn't mean that they're going to do everything within those departments. It just means that they're being held responsible and have some sort of accountability. An easy way to remember it is that only one person can wear each hat, but one person can wear multiple hats. And that's why we've got, you know, this picture here of a guy wearing multiple hats. So you could be the director who is wearing, let's say you're an electrician business and there's two directors. One director could be who has the hat of the product service development department and the operations department. So he's in charge of that of those two departments. So he's wearing two hats. The another director is the one who is in charge of sales, marketing, finance, admin, IT, and human resources. So he is the one that's wearing all of those hats. So that's just the example of making sure that only one leader in each box. The other rule is that to make sure that you have each department has clear responsibilities and clear tasks, and each department can also have its own key performance indicators. So you can have overall business key performance indicators to help you know if you're on track to achieving your goals, but it's also important that each department has key performance indicators as well. And then lastly, review the structure regularly. It's not a structure that you just set in stone once and that's it. It's something that's constantly, that gets updated and will change constantly as your business grows. So just make sure that you review it regularly and make sure that it's still in line with the goals and plans that you've set for the business. So back over to Ian, who's going to take you through the next couple of steps.
Right. Thanks, Ikra. I'll just get this working. Give me a second. There we go. Should be it. Right. So the previous steps, last step and this step, and are mainly about what happens as your business grows. You know, the initial ones were maybe a bit more to do with how you need to change your attitudes and how you need to plan properly for the growth of your business. And step 5 about getting your organizational structure right is about when your business is generally starting to grow, and you need to put this structure in place. Otherwise, what happens is the business collapses. And step 6 is about developing the skills to be able to create a decent culture within your business. And that makes a huge difference, because if you've got a bad culture or a toxic workplace, as it says, what happens is people are all pulling in different directions. They're actually pulling the business back from the direction it wants to go in, and all sorts of reasons. So what I'm going to do is just quickly run through. I know we've not got a massive amount of time left, but I'm going to quickly run through some of the signs of a toxic workplace. First one is trust between the owners and the team. We all know that when we see it, where the owners talk about, or the owner talks about people in the team in dirty ways and doesn't trust them, and so let's fit trackers on to make sure they're not doing homers at night and all that sort of stuff. It's a sign of lapse. Second one is not having any core values or not living into them. So why is this important? It's important because if people don't know what is important to business, it's really hard for people to make decisions without having to ask the owner. So if you're an owner and you get 25 phone calls an hour from members of your team, it's because they don't know how to make decisions based on the core values of the business, and they can't hold each other to account. And in a sense, if nothing is of value or core value, kind of anything goes. The next thing is after meetings. Now, a sign of, again, another sign of toxic workplace is you have a meeting, you get the team together, everybody's quiet, apart maybe the owner, who basically just tells people stuff. But as soon as they go outside, they're all talking to each other. That's because they don't feel that it's safe to contribute within the meeting. And that if that's happening, there's a sign that something needs to be done about that. The fourth thing is that highly stressful interactions are the norm in the business. So instead of people just being fairly relaxed and communicating and getting on with, there's an element of fear, there's an element of openness, if you like, and people not willing to share things, and if they might be bullying is another example of highly stressfulness. So the next one, team members and owners mistreating each other, again, bullying here, or people looking after themselves first, stabbing people in the back, getting them into trouble. These sort of things are happening. There's definitely some culture. The last one here is no team buy into the core purpose or goals. So, or a complete absence of them, as you mentioned earlier. If nobody knows what the business's core purpose is, what their business is there for in terms of the customers, then how can they adapt what they do and how they do it to be in alignment with that? And it really is important, as the more toxic a workplace is, the less efficient, profitable and rewarding the business will be. You'll get high turnover of people who are demoralized, and really high recruitment costs. So quickly look at some of the steps we can do to overcome this. So I think what you need to do is take a really honest look at your business through the points I just mentioned. Identify where you think there are problems, and then follow the following steps. First one is get a set of core values for your business, maybe up to 5. We've got at Roslyn, we've got 5 core values. I won't go through them at the moment. If you're interested, get in touch and we can talk about it. But you've got to define what these core values mean in terms of how people behave, etc. You've got to define core purpose. As I said before, why does your business exist for your clients? What are you there to do? If you could check out Simon Sinek's video, Start with Why on YouTube. And it's originally about 15 minutes long, but it is critically revealing and opening about how this works. Next one, make your core purpose and core values highly visible. Make sure that everybody, including you, has memorized them and actually hold each other to account for living into them. Quick example, if I'm having a bad day at Roslyn Associates and I get a bit of work that comes through to me and I think, oh, it's not very good, but we'll just send it out. Temporarily, it's not very often, but if it did happen, the person that's done the work could actually say to me, hang on, one of our core values, one of our highest values is quality work. So we can't do that because it would be, it would be against our core values. So it means that everybody in the business can hold everybody else to account if anything they do is going to go against their core values. That's so important. So we talked about your business plan earlier. Break it into goals and actions for each team member. So spend the time one-to-one and explain how they fit into the business's purpose, their values, and tell them what's expected of them in that context. And if you get that, if you do that, then some of all the individual goals will actually help you achieve your plan. The fifth, ultimate one, I think, is, no, not quite, is celebrate success. In other words, if somebody does something really well, it could be, an apprentice getting fully trained. It could be maybe somebody bringing in a really big job. Whatever it is, give recognition to them for great performance. People love to be recognised and celebrated. And that helps much better culture. Next one is meet your team regularly. The biggest problem we see is when the owners don't have meetings with their team, because then their communication breaks down and people just do their own thing. And it gives you time to address some of maybe small issues that are small at the time, but which would grow into something much bigger if you didn't address them at the beginning. And then you get resentment and people leaving and all the rest. And again, actively discourage these after meeting meetings. I don't need to say much more about that. Stop playing favourite. So don't give a lot of benefit and preference to what some people and not others. It's based on their KPIs and their job description. People will get resentful about it. And almost avoid being held to ransom by toxic employees. Help them change. Somebody might have a bad attitude, as we call it, because of something they misunderstood about what's going on or whatever. So spend a bit of time, try and get them on track, because that's a much better way of doing it than leave. But if ultimately they don't do it, you probably will have to leave. And if a toxic employee leaves the business, the good employees, team members will really appreciate it because they'll know that you're looking after them. This is the last, is have a bit more fun at work. So, life isn't all seriousness. Make work a place for fun where appropriate, so that people feel that they can relax and enjoy their work rather than being very sort of tight and serious about it all the time. So what I'm going to do now is pass back to Ikra for the next step.
Yep, so we've got step 7 here, which is all about accountability. So a coach is someone who tells you what you don't want to hear and has you see what you don't want to see. So you can be who you have always known you can be. So who's the best person to hold you to account for the goals and actions that you want to achieve in your business? Could it be your wife or your husband or your partner? That's not always a good idea because there's usually quite a lot of emotions involved. It does need to be someone who will be firm and hold you to account, and someone who will empathise and understand the challenges that you're facing. So have a think about who that person can be. Who can be your accountability coach? It needs to be someone with the knowledge and skills needed, as well as having backbone and heart. So on to step 8 with Ian.
Great, thanks, Ikra. Right, step 8 is build strong networks. What that really means is find a way to build a network of people and contacts around you, partly to get business, but also to get support and to get suppliers who can provide anything you might need, or someone who can pick your brain. And the great thing about referrals is they don't actually cost you anything. And probably the best way to gain new referrals is by networking, maybe with existing customers or clients and people you do business with. So how can you maximize referrals from your network? Well, the first thing is to think about the lifetime value of a client. So let's say you're an electrician and you do work regularly for a letting agent, maybe several letting agents. And let's say the average job is £100, and the letting agent gives you about 50 jobs per year. Your gross profit margin is 50%, and the letting agent generally keeps giving you work for, say, 5 years. So the lifetime value of the letting agent to be £12,500. That's £100 per job, 50 jobs a year, 50% gross profit for 5 years. So given that letting agent is worth £12,500 to you, how much could you do to encourage them to demonstrate how much you appreciate their repeat business? It could be simply a complimentary bottle of wine, maybe something else, something that shows that you appreciate do from you. The second thing is identify businesses that you work with that complement your services. For example, a builder might work with surveyors, architects, bank joiners, electricians. You could create an informal group of these people who work well together and commit to a regular get-together and focus on how you can work more effectively together. Third one, focus on referring more work to your network than you seek in return. Anybody who's in BNI, except has been in BNI, maybe will realize they call that giver's gain. If you give work to others, then they have a feeling that they want it to you, and this is called the law of reciprocity. So when you do something nice for someone, they'll often reciprocate with a gesture far more generous, and hopefully in this case, referring. So fourthly, find out where your target market hangs around. So it may be existing networks, it could be lots of Roslyn networking things, but do a bit of research, find out where the people who you want to work with, where they network. The last one is sponsor and get involved with voluntary or non-profit organizations. Choose something that you or your team are interested in. It could be a sports club or a charity, perhaps. That gives you visibility within your locality, your network area. So which of these 5 could you actually implement today? Have a think about it. So I'm going to hand back now to Ikra, who's going to talk about step 9 and 10.
So step 9 is all about monitoring your progress. So having a financial dashboard is really important. And you could compare it to having, the dashboard that you have in your car. The dashboard in your car tells you how fast you're going, when you're going to run out of fuel, what your engine temperature is. It's exactly the same in business. What are 3 to 5 of the most important things or key performance indicators for you to keep an eye on? How do you even decide what are the most important, and how do you calculate them? We've got a 4-step process to help you create your own financial dashboard. So first, you need to understand which KPIs have the greatest influence on your ability to achieve your goals. So for a trades business, gross profit percentage is probably one of the most important numbers. So that might be one that you want to measure. Let's say one of your goals, let's say you're a big contractor renovation company, and one of your goals is to take on really large jobs rather than smaller jobs. So one of your key performance indicators could be to keep a track of the average job value of the jobs that you're taking on. So then that you can see over a period of time whether the average job value is going up, and then therefore you're working towards achieving the goal of taking on larger jobs. Next is to work out how you're going to measure the key performance indicators and get it as automated as possible. So then it's less of a task for you to measure the key performance indicators. If you're on a software like Xero, you may be able to generate reports which will help you show the results of your key performance indicators. From there, set up a simple page report that you can produce on weekly or monthly basis to keep a track of your progress against the key performance indicators. And make sure that you allocate some time to go through the report as well, not just produce it and look at the numbers and then put it away. Go through it and understand why the numbers are, or the results for the key performance indicators are the reason that they are. And then lastly, repeat these steps with individual team members. The key performance indicators for team members will be different to the key performance indicators that you've got for your overall business. Establishing key performance indicators for each team member lets them understand the definition of a great day's work. How does your team know whether they've done a great day's work or not? So monitoring and reporting on key performance indicators regularly will help your team know that they're on track. And we finally got to step 10. So the past 9 steps that we've just gone through can seem like hard work, and I'm not going to lie to you, I'll be honest, it is hard work. It's not an overnight solution. It takes time and effort to put into place in action. It's easy to lose sight of why you're building a business. And as I said at the start, it should be there for you, not the other way around. And that's still true when you're working on your business and not just in it. So step 10 has 2 parts to it. So we've got life is short and smile while you still have teeth. So the first is to make sure that you take care of yourself. Make sure that you're getting enough rest and sleep, eat healthy, get exercise, take time off, book that holiday that you want to book. If you've read books or listened to podcasts about successful business owners, they all have some sort of routine when it comes to taking care of themselves. The second part is to remember that there is only now. Do you want to spend decades building a business and putting off things that make you happy, believing that you will be happy when it's all done, only to realise that you've missed being happy all those years? If you've got a family, they won't wait until you've built your business before they grow up. You won't get any younger as the years pass on. So make sure that you experience all the things that make you happy whilst you're building your business. And Ian is just going to quickly summarise the 10 steps.
Sure. Okay, 10 steps very quickly because we're running out of time. But first of all, get really clear on what you want. Get that goal sorted out, get it really specific. Be open to change and new learning. This is about mindset and attitude and learning stuff, like learning how to run a business. Define where you are now, warts and all. In other words, if you don't know where you are now, you don't know how you're going to get from where you are to where you're going because you don't know where you are. Number 4, make a plan. How are you going to get there? If you're driving from A to B, you have to look at where the roads are, which way am I going to go, etc. And this is equivalent of making a plan for your business. As you grow, you're going to bring on people. So get the organizational structure right so that the business just doesn't get to a certain point and then either stagnate or even worse, collapse. As you bring on people, you need to be a better leader. There's the skills and attitudes that you need to adopt and learn in order to build that strong workplace culture and be a better leader. Number 7, get someone independent to hold you to account. As Ikra said, this isn't easy. This isn't a magic pill. It's hard. And everybody knows if you're trying to do something that is hard, there are going to be occasions when you find it too hard that you can't do it. So you need to know that someone's going to say to you, have you done it? You're going to do the things that you say you're going to do because you know where you want to go. You know what you need to do. Do you still want to get your goal? If you do, you're going to have to do these things to get someone to hold you account. And then build strong networks. No business does it all by themselves. No business owner does it all by him or herself. You've got to actually build these people around you so that you can get information from them, so you get support, so that you can give them things, so they'll give you things back. Number 9, monitor your progress. If you're going somewhere, you need to know whether you're anywhere near it and how much you need to do still to get there. Find the right KPIs, make sure you're measuring the right things, whether it's your sales, your gross profit percentage, your net profit, your how much money is owed to you, whatever it is, you've got to monitor it and you've got to pick the right things. And the last one, in many ways, it seems the most superficial, but it's actually the most important. Do you want to build this wonderful business and find that you've missed out on your whole life because it's taken you 25 years to build it, and by the time you've done it, you're alienated from everybody in your family, your friends? Just live life now and build the business that will give you the resources to enjoy that life. So that's the 10 steps that you need to take to have a better business. I'll pass back to you, Krina.
Thanks, Ian. Okay, so, oops, sorry, let's get the slide there. There are several ways that we can help you achieve your goals. So first of all, we've got the intensive Build a Better Business one-to-one program, which is £12,000 plus VAT. And this is a very tailored, specific program to you and your business, and it will cover, things like creating the business plan, the financial forecast. If, for example, you wanted help with the organisational structure, that would all be included as well. It's sort of what we would do is sit with you and discuss with you what it is that you and your business needs, and have it really tailored to you and your business specifically. So it's typically about 60 hours and it's spread over 12 months, or it could be less than that. And it can also involve some sort of coaching as well, whether you want that to be weekly coaching or 2 weekly coaching, monthly coaching, quarterly coaching. It is really tailored to you and your business. And then just quickly going through the other ways that we can help. We've got the business planning session, which is from £1,500 plus VAT. And that's, like we said in step 4, which was all about helping you create the plan and the rules that we mentioned in that slide. We follow all those rules. It is a 1-page 2-sided business plan, and we go through the whole process with you and help you get 4 main goals and your key performance indicators as well. All that is included within the business planning session. We've then got the financial forecast, which is also from £1,500 plus VAT. And again, like we said in the business in the planning slide, we use the bottom-up budgeting for that, but we go into a lot more detail. It's a 12-month forecast, and we split the sales over 12 months, and we vary it in terms of seasons, etc. Look into each expense to set budgets against it, and work out what all that's going to be. So it is really intense 2 sessions, the business plan and the financial forecast, but hopefully it's there to help you get to the goals that you want to achieve. We then have the accountability. So we've got oh sorry, I've missed out the goal setting one. So we've got the goal setting 1-to-1 session, which is £400 plus VAT. So that's just a one-off session to help you set any goals that you want help setting, and it's a 1-to-1 session. And we can help you set business goals and personal goals. And then just moving on to the coaching. So we've got monthly coaching and quarterly coaching. The monthly coaching is £300 plus VAT per month, and the quarterly coaching is £500 plus VAT per month. And we have a set agenda. We have some pre-work that goes out before the meeting, and we go through in all the goals and action points that you said you were going to do, and we go through those. We have a look at the numbers. So they are really good sessions, and our clients really enjoy the coaching that we do with them. We also have a complimentary meeting, which is free, and what we do is we sit with you for an hour. We discuss what your goals are for your business and what they are for yourself personally. We have a look to see what challenges you're facing currently in the business, and then we come up with a plan to work together on how we can help you achieve your goals. Whatever it is that you need help with, remember it is likely that you'll need to stretch and get out of your comfort zone. And we know it may be difficult to commit to spending money right now. We do have different payment options available, so please don't let cost be a barrier. Get in touch and we can work together to come up with some sort of arrangement that you can manage. And we know that the benefits you will get from these services will be far greater than our fee. And most importantly, it's about helping you as quickly as possible and ensuring that we are working with you to build a stronger, more resilient business. So one of the biggest problems in business is failure to implement. And we like to call that, we just say that that's FTI, failure to implement. So if you didn't write anything down through the webinar, write 3 things down now that you're going to take as a result of coming along to the webinar today. And make sure that you implement them in your business. Doing nothing is simply not an option. Remember, the definition of insanity is doing the same thing over and over and expecting different results. So make sure that you do something different. So that brings us to the end of the webinar. So if anyone's got any questions, I'll have a look to see if anyone's popped in any just now. But if you do have any questions, please just pop them in the Q&A box and we'll answer them. I know we're running out of time, so if anyone does need to leave, there will be a short questionnaire that will pop up, and if you could please just spend a couple of minutes filling that in for us, we would really appreciate it. And if you are interested in any of the services that we mentioned, you just tick them in the survey and we'll send you out more information. You're not committing to anything by ticking those in the survey. It just means you're interested in getting more information, so please do fill that in. So I'm just going to have a quick look to see if we've got any questions. Looks like we've got a couple so far, so I'll just quickly go through those. I've got one here that says, How much of a business plan or financial goals for the business would you say is okay to share with the team?
A good question. I think it depends on who you are, what your business is, and who's in your team. I think a lot of business owners have a reluctance to share anything because they're scared that people will possibly do something like say, well, if I show them all the numbers, they'll think I'm earning too much and they'll want a pay rise. Well, yeah, and that might happen. But what you can do is you can decide which of the business's KPIs are important for that particular individual and find a way of sharing it in a way that doesn't lead to the sort of fears that you've got. Now, it's difficult to say generally what that would be, but it'll vary from person to person. We've got clients who share everything, the whole numbers. And we've got other ones who share very little because they've still got a lot of work to do on the culture, toxic culture within their team. So if they fear that if because of that toxic culture or the remnants of it, if they share a lot of information, then people might leave and go to competitors and tell them and stuff like that. So it really has to be specific to the situation that you're in to know how much to share. I don't know if that answers it, but it's kind of the methodology we use when we share things. We work with clients about what they're going to share.
Yeah, thanks, Ian. The next one here is not really a question, it's more of a comment. It says, I really like the idea of doing a business plan, forecast and coaching, but I need a bit more cash.
Sorry, I shouldn't laugh. Yeah, I hear this quite a lot. It's like quite a few prospects will come to us and we'll have a session with them for an hour, complimentary session, just to explore where they are now, what they're trying to achieve. And we tell them in the meeting what things cost, what their investment, if you like, is going to be over that, and they're all very positive. And then nothing happens. They don't commit to it. And usually, what I find out is they say something like, "Well, I'm just going to wait until I've got a bit more money, and then we'll be able to do it." Now, to me, that's a bit like, I don't know, if you're trying to get fit and you've got to exercise, you've got to do the hard things that are going to make you fitter, and to do hill walking, whatever it is. It's like saying, I think I'll wait till I'm a bit fitter before I start doing the things I need to do to get fitter. Or at the sort of problem end, it might be more like, I'm not feeling very well, but I'll wait till I feel a bit better before I go to the doctor. It doesn't make any sense. I mean, the whole point of what we do is to help businesses improve and get to where they want to be. And we don't tell them where to go, it's where they want to be. And by the fact that they're talking to us means that they're not where they want to be. So a small investment now with us can have major returns. So I understand obviously that cash flow can be an issue, and this isn't true for everybody, but there's an awful lot of people who make that mistake of thinking, let's wait until we're in a better place before we do all the work and investment to get to a better place, which really doesn't make any sense whatsoever. Sorry, this is something I feel very strongly about. Okay, sorry. Yeah. No, I hope that answers it anyway.
Well, it doesn't look like we've got any more questions. So okay. The only thing left for us to say is thank you very much for coming along to our webinar. Sorry, it's gone few minutes over. Just remember to fill in that questionnaire once the webinar ends. It'll pop up on your screen. And if you've got any questions or if you want to get in touch, please just send us an email or get in touch through the website. And we'll be in touch. Thank you very much.
Thank you.